We've watched the stock market crater. We've watched the stock market have one of the choppiest weeks in history since I believe the mid 30s is what I saw. But it's definitely been up, down, and sideways. And one of the things that I think everybody that is well vested in real estate can agree on is that those of us that are in real estate for the cash flow, for the appreciation, we're not going to see the huge market swings because what we've invested in is really based on a supply and demand that is much more close to home. So while you may see Procter and Gamble stocks going through the roof right now, those of you that own stocks in Royal Caribbean or Princess Cruise Lines are watching those go through the floor. Gas prices are all over. We're not seeing that happen with real estate. We're seeing people come out thinking that all of a sudden there's a bargain in 3 days, which sadly they're going to be a bit disappointed because those values aren't going to materialize in a market that quickly. The real estate market, even if you look back at the Great Recession of 2008, the real estate market didn't react overnight like the stock market does. Warren Buffett says it very well, and I can't quote him right off the top of my head, but the stock market is more of a popularity contest and a voting machine at oftentimes. And right now, public sentiment is all over the map. So we've got those that think we're headed into an apocalypse, and we've got those that think that now is the time to buy. We've got those that are trying to buy on the dip and keep missing it because it keeps going lower. And so when we look at that, all of the things that we're seeing in the market right now are telling us all of the reasons why our real estate purchases were phenomenal. Because that real estate is not reacting the same way. You don't have, if you own single family that you rent out, or even some multifamily, you don't have your tenant calling you today trying to renegotiate the rent for tomorrow. That's not happening, but you do have people selling stocks that they bought last month thinking it was going to continue to appreciate, and it's gone the other direction, and now they're selling to remove their position. So one of the best things about the real estate market is becoming very, very transparent right now in the economy that we have and in what you see for demand on assets that are constant, assets that have stability and longevity, that aren't fluctuating madly. In fact, I would dare say that we're seeing massive amounts of cash leave the market because they've seen the appreciation. They've realized that the upside potential that they have recognized since the bottom of the market in 11 and 12 is now all but evaporated, and the risk that is there in the market continuing at the rate and velocity that it has run into some serious resistance. And people are realizing that commodities or stocks, even gold and silver this week a bit have defied the safe haven that they have been, and we've seen gold lose value. We've seen the things that people have always said is where you hedge your bet, but stay in the market. We've seen those take a hit. We've seen a lot of things happen, but I've talked to friends of mine in the market that are appraisers, that are realtors, and while they have seen a bit of a slowdown because everybody's trying to see what business they're going to be doing over the next couple of weeks, and whether or not their business partners are going to be joining them, or if they're going to be coming to you from a Zoom meeting or a Skype or just a phone call. But at the end of the day, the smart money that stayed in real estate isn't experiencing problems, isn't experiencing fluctuations. And so while that will come out later on down the road when we've seen if this turns into more than it is currently, if it turns into more than a scare, if it turns into more than H1N1 was several years ago, where even in the United States, 68 million people were infected with H1N1. There's only 12,000 related deaths related to that, much less than the common cold. But if we see this come into something more, and this does become problematic and it does continue to shut down the world's economies, there's no way that it cannot have an effect on cash flow from the household up to the landlord. But the reality is it's a short thing and it's a temporary thing that will slowly feel its way into the market, and not everyone that is your tenant will have that same difficulty at the same time, or some will have the difficulty right away, some won't have the difficulty at all.